we're going to be taking a look at a handful of innovative full production Tradetech solutions over the course of the next hour or so. As a quick introduction, my name is Shannon Manders. I'm GTR's Editorial Director, and I'm really pleased to be chairing this session for you today. We've lined up 3 companies who will each be treating us to a very brief 10-minute presentation on their trade and finance enabling products and solutions. What happens then after each 10-minute presentation, you as audience members will be given a couple of minutes to quiz them on their product or solution. This could be about the solution itself. It could be about their adoption rates, perhaps some of the challenges that they've experienced in getting to market. It's an open floor. And then once we've gone through those 10-minute presentations and Q&As, we'll then move on to a panel discussion in the second part of the session, where I'll be inviting a panel of industry experts. They're actually assembled there in the front line, where we will continue asking some questions to the presenters. So I must ask the presenters to please hang around after their presentations. But then we'll also be furthering the discussion about digitization in Africa, the progress that we've made, what has been holding us back. And we're going to make sure that this trade digitization discussion happens really within the African context. So that's, I hope, an overview of what's going to happen over the next couple of hours. So I'd like to start off by introducing our first fintech company. The first person who's going to be presenting to us is Raja Debnath. Raja is the co-founder of Veefin, which is a provider of supply chain finance technologies. Raja, over to you.
So while the slide's on its way, my name is Raja Debnath. Veefin is the company that I started around 4 years back. I used to be with the World Bank earlier, advising banks on supply chain finance advisory technology. What we do as Veefin is we provide white label enterprise solutions to anyone who wants to be in supply chain financing. So whether it be bank, whether it be a marketplace, whether it be fintechs themselves. So people call us fintech, but we are not fintech because we don't do any financing. We don't onboard any anchors. We don't touch the money, we just provide technology. So what are the 3 challenges? So why was Veefin formed? Veefin was formed because there are 3 challenges which we saw lenders face. The first one was that very few platforms in the world, pure technology platforms, extremely expensive, one-time licenses usually. The second was, those familiar with supply chain will know that most solutions in the market start, when they call supply chain finance platform, they start once the supplier or the distributor has got a limit assigned to them. But as bankers, we know that the business actually starts much earlier, that is during the onboarding. So you onboard a supplier, post that the supplier or the dealer requests multiple facilities, not just supply chain financing, but beyond that. It could be an LC, BG, it could be a term loan, all of that. That's the second piece. And the third was that all of these solutions cater on the supplier side only to tier 1. So what does the tier 1 supplier mean for definition's sake? A supplier supplying directly to the large corporate is a tier 1 supplier. Suppliers supplying to the tier 1 supplier are called tier 2. So it's a vertical structure in terms of tiers. So solutions in the market cater to tier 1 suppliers. There's nothing which is catering to the tier 2 suppliers or the tier 3, tier N. So what did we do? We said there are 3 things that we'll do which will make us different. And the first is that we will be predominantly a SaaS solution. So we are supply chain financing as a service. And when we say as a service, it means on the commercial side. But it doesn't mean that we have to be only on the cloud. So we could be on-prem, we could be on the cloud, or we could be hybrid. Okay, all 3 of them. The second part was that we said we'll do end-to-end, the entire journey that I explained in supply chain, onboarding, multi-facility underwriting, and then transaction management and loan management. We said we'll give the entire stack. Okay, so you don't need to work with multiple vendors as a lender, but one vendor, you can catch hold of the vendor's neck when something goes wrong. And the last is the deep tier piece that we started. So when you think of deep tier, the people who are familiar with deep tier, if you do any search, blockchain is the first thing which will come up. But we are not blockchain because we believe deep tier is not a technology problem. It's more of a banking risk problem, and we have a banking risk solution to that. While those come out, so the stack that I was talking about, it's that entire stack. So it starts with onboarding, then it goes on to the entire underwriting. So whether it's the evaluation, credit scoring, automated decisioning, deviation rules, business rule engines, all of that is in the second block. Okay, so these two blocks are usually not present, or if they are very light on supply chain finance solutions. The last block, the supply chain transaction management, that's usually, when you talk of supply chain, that's what usually supply chain finance platforms mean. Okay, the transaction management or the loan management piece. And finally is the collections. Collections is important, not as much on the supplier side, but the moment you go onto the distributor side of the leg, so that becomes much more critical. And in developing markets, that's where the business is. There's a lot more business on the distributor side than on the supplier side. And as I said, that our platform, not only from a horizontal standpoint in terms of all the solutions, but in terms of products, we have all kinds of products. And we are focused on tech. We do only tech. We do not go into onboarding suppliers and anchors ourselves. This is what I was talking about in terms of deep tier. The fact is, tier 1, we all understand, easy peasy. It's the tier 2 and the tier 3, which is the problem. How do you do financing out there? And for people in this room who are doing supply chain financing, you will know that if you look at a large corporate, all banks, all lenders are there who are ready to finance the large corporates' entire accounts payable. However, if you look at data aggregated across banks, you will figure out that not more than 30% of all the payables of a large corporate actually get discounted by all financiers put together. 30%, that's it. Most banks do not have this data because banks usually see it on a standalone basis for that set of suppliers who are with them. But when people like us, while I was with the World Bank, I used to work with multiple banks in the same market. And this is something which was true across markets, that large corporate, brilliant, everybody has done the hard work of onboarding them, but not more than 30% of their entire payables get discounted. So the solution is how and why how do you push that credit down the chain? Questions I get asked is why should we do deep tier? Because the logic, again, from a corporate standpoint is that the fight is not between two corporates. The fight is between the supply chain of two corporates. And when we say supply chain, why it's important is, let's go back to the tier example. Your tier 2s, when they're supplying to tier 1, in their cost of production, cost of goods, is also the interest component. So interest component is a fact of the cost of goods and the final cost of goods always through and through. So if you are able to reduce the cost of interest, even at the tier 2 level, at the tier 3 level, that in effect will be a saving for the large corporate at the principal level. So that's why corporates understand. So bankers in most markets don't speak about this, but if you go and speak with corporates, corporates understand this very well. And corporates are looking for these kind of solutions, wherein you can allow for financing at the tier 2, tier 3, and there's a big cost arbitrage out there because the interest rates which they get, the tier 2s and the tier 3s, are much, much higher than what a tier 1 supplier would get on invoice discounting. Question again in terms of why would the tier 1 help, or why would the tier 1 allow tier 2s to get onboarded onto the platform? It's all money. At the end of the day, the arbitrage between what the tier 2 supplier is getting financing at and what is possible through actual deep tier financing, the gap is so huge that there's an arbitrage which is possible, and that lubricant which of money can be spread across the chain. So what is Veefin's way of doing it? I said blockchain is not the way. Okay? Because what are others doing in the market? It's important to understand that. When they say deep tier, people are trying to link invoices. So if I am a supplier, a tier 1 supplier, I'm supplying to a Mercedes, I'm supplying steering wheels. And Shannon here, she's my supplier, she's supplying a rubber to me. The prevalent solutions in the market are trying to figure out what component of my bill to Mercedes has her rubber in it. It sounds great, but works great in a laboratory, does not work in the real world, because that's not the way business operates. Okay? So we said, let's go back to 101 and figure out what is the solution, because everybody's trying to use blockchain to figure out provenance, figure out the linkage between invoices. We said, forget that. What is the challenge here? The challenge is not how to link invoices. The challenge is that banks are today not ready to create a supply finance program for me. They're ready to create for Mercedes, great rating company. I am unrated. So that is the challenge. Because if there would be a program for me, Shannon would have got her invoice discounted. So we said, let's figure out what is stopping the bank from setting up a program for me. So we said financials. Okay? If financials are a problem, and financials are required to set a credit limit, so forget credit limit. Because banks are used to setting up credit limits on an annual basis. For Mercedes, then look at it every year. So now, let's look at dynamic credit limits. So whenever I get an invoice which is approved by Mercedes, I am technically good for that amount of money for those many days. So if I'm on 10th of March, if they're going to pay me on 30th of April, so I am good for that amount of money till 30th of April. So whether I discount it or I allow my suppliers to discount it shouldn't matter to the bank. And that's the aha for the bank. I was like, yeah, really, actually it doesn't matter. As long as you can explain that to the bank, everything is then very easy after that. And then the solution takes over, then the system takes over. It matches the invoices, it matches the amounts, it matches the amounts, it matches the dates. At no point in time is the exposure that a bank takes higher than the invoice or the set of invoices which have been approved by the large corporate. So without taking a single penny's more risk, the bank is able to push the entire credit down the chain. Because if the tier 1 supplier does not want money, great. The tier 2s may be taking the money. And our belief is that the tier 2s it will exhaust at the tier 2 level itself. So we have a lot of clients who are using the tier 1 solution. Okay? We have clients in multiple geographies across the world. We are in Africa now. We would want to get into and work with African clients. Because we are a SaaS company, we believe it's going to be that much easier for us to have conversations, meaningful conversations with financiers out here. And that's what allows us to get deeper in. We have onboarded a couple of anchors in India right now. Banks have onboarded them. The main transactions on them will be happening in the month of April. So right now, the tier 2 suppliers are getting onboarded. And banks love this. We have a large development center in India. And we know for a fact that whatever we are saying, great, but when we hit the market, it may still not work. Okay? Because every market is different. There may be some other solutions which may be required, so we are perfectly fine with that. So we will look, and we are looking for partners, banks, large corporations who would be interested in something like this. We can partner, we'll hit the market. There will be not one, my belief is that there will be at least 4 models which will be required, or 4 different types of go-to-market strategies which will be required in this. We have 4 models already created. We are going ahead with 1, but if we go in the market and figure out there are 2 more, so be it. We will do it because we believe this is the way to crack it. Blockchain, we have been doing it for the last 5-6 years. Nothing has happened on it. Blockchain works brilliantly when it's a complete captive supply chain. In a captive supply chain, that works. So you have good examples of this system working in China, in the Foxconn chain. You have examples of this working in the logistics chain, one in Singapore, another in China again. But nothing beyond that. Whenever you remove the captive angle to it, this fails. And this is the one we believe which will be successful.
Let's take some questions from our panel. Bohani, Andrew, you got a couple of questions? Let's go. Bohani from ABSA.
Thank you very much. It's very interesting because a few weeks back I was talking with some of my colleagues about why I think supply chain finance is not solving the trade finance gap, that it's not scalable because it doesn't deal the tier 2, tier 3, and tier 4. So it's quite interesting that you're now talking about that. And so I suppose the question I have is, have you managed to get, and you're correct, from a bank perspective, it's easier to do the due diligence on tier 1 supplier. But have you managed in your product to be able to get the banks across the line in terms of, and I like the way you've explained it, to say that if Mercedes-Benz has made a commitment to tier one supplier, and actually that invoice, that's part of it supplied by a tier two supplier, then it's the same commitment.
True.
But have you managed to get some banks across the line on that?
Yes, so we have 3 banks who have signed up with us, okay? And we also, so one, we are a tech company. Second, we also have an advisory arm. So we continue advising banks also. So maybe just because of that, our conversation with banks is slightly different. Banks look at us not just as a tech provider, but also as a thought leader in that space. So our conversations are slightly more easier, I would say. I think it's easier. So banks are able to do that. Our advice to banks always is, even at the tier 1 level, when you're doing supplier financing, don't do a heavy-handed KYC. So keep it light. So I think if you can get the bank to understand that light KYC is the route to go, great. If the bank is hung up on KYC, then there are different structures which could be used. You use a discounting structure in which you do not even have to onboard the suppliers, if that's the worry. And that's the worry which you often get with multinational banks who are very wary about KYC in local markets. So don't do any KYC. Use a discounting structure. Don't have a loan created in the name of the supplier at all. So your problem is solved.
Excellent. Thank you. Andrew, any questions, or you want to save them? Yeah, sure. Yeah, please.
So you mentioned 3 banks, and you mentioned, I assume they're in India. What's your...
2 in India, 1 in Saudi.
Okay. So my question was going to be from a growth perspective. Do you have any initial target markets that you're looking at, and kind of a follow-on question, are there any kind of barriers that you could see for adoption of your platform?
So first question, markets, no. Our aim is, and our vision is to be the #1 supply chain finance company in the world in the next 2 years. So world, everywhere we'll go. We'll go everywhere. Point number 2, in terms of barriers, no, the barriers are usually in the minds of the bankers. Regulation, I worked in multiple countries. I have advised in 16 countries till now. You do get bankers who say, yes, there are barriers, regulatory, but the structures that you have which are available within the supply chain finance domain allows you to work within those structures. So regulatory is not the barrier.
Raja, I think that's it in terms of questions. You got off pretty lightly, I would say. Thank you very much for demonstrating that to us. And we wish you all the best for your future. Thanks very much. So that's the first presentation down of 3 presentations. So I'd like to ask the next presenter, Ahanna, you're next, right? To take the stage. Ahanna Anaba is the Head of Sales, Digital Solutions and Partnerships at Finverity. She's joined there very recently. Finverity is a mid-market supply chain finance provider. Ahanna, over to you.
So good afternoon, everyone. I know everyone is just, sitting down after lunch, but hopefully we can get everybody a bit more excited. My name is Ahanna Anaba. I've recently joined Finverity as the head of sales for our digital solutions and partnerships, which in my opinion means I'm the fun one in the team. I was previously at an Africa-focused digital deal origination platform where I managed about $1.3 billion worth of transactions across different asset classes, but specifically focused on Africa. So Finverity is London headquartered, but we are emerging markets focused. We're a supply chain finance fintech. We're backed by a few venture capitals. We're in quite a few countries, and we're growing on about a few hundred percentage points every quarter. We run 2 main business models. I'm going to be focusing on one for the purpose of this presentation, which is our SaaS. SaaS meaning that we deploy technology to financial institutions for them to run their supply chain finance programs. The way we look at it at Finverity is the supply chain finance ecosystem has quite a few players. For the purpose of this presentation, I'm going to categorize them into 2 levels. Right at the top, we have our funders. These could be your DFIs, your asset managers, large central banks, and they would be looking to primarily take on just financial institution risk. They would have a clear mandate, whether it's ESG-driven, risk-return profile, and I'm sure we know the rest, but they would want to have visibility in their portfolio to ensure that the funding that they're actually providing is used specifically for that. In the middle, we have the fund managers, as I would like to call them. which would be your regional banks, your trade finance funds, or pretty much anyone who's lending directly to corporates. Here, they would be trying to prove to their funders that their assets will prove the integrity of their assets, prove that their processes are proper, and also prove that whatever they've been instructed to do is actually happening. This is really where a lot of the operational burden is. And then finally, you have your corporate clients who could be your large distributors, mid-sized corporates who, as we all know, rely quite heavily on supply chain finance. So our second business model that we run, I think that really differentiates us in the market, is we actually use our own technology. So the technology that we white label to our clients, we use ourselves to run a portfolio. Our portfolio at the moment is about $350 million. Our focus is really in the UAE and the Eastern Europe region. And that's where we're seeing a lot of growth. I think for us, really, that is why we are so confident in our technology. So without further ado, I'm going to show you what the system actually looks like. So I'm going to log in as a funder to start with. So funder, think DFI. I have quite a few channels of funding. I'm present in quite a few different countries, and I want to see what my portfolio actually looks like. So as a funder, you log in. Okay, so as a funder, I want to see exactly what's going on in my portfolio. I can look at my portfolio on a fund manager level. So I can invite different fund managers to be a part of my system, and I can actually look at their utilization and what P&L that they're actually generating for me. If I want to see a bit more information, I can actually go into it and look at it on an obligor level. So this is essentially what exactly are my fund managers using my funds to do. Here I can see the utilization, what countries this is in, how much it's actually generating, and essentially manage this. If I'm that interested, I can also look at it on an invoice level, specifically what invoices are generating what, how is it being repaid, and essentially the entire process. I can also choose strategies. Strategies here could be mandates. A mandate would be basically me saying, I only want to look at countries, I only want to look at companies in the United Kingdom. This is the return that I'm looking to generate. And my fund managers essentially have to fit into these strategies. And then I can actually track the utilization of each of my strategies. So imagine DFI, central bank with quite a few different initiatives, and you just want to see how my initiatives are actually progressing. I'm going to switch to a fund manager view. So I am a new trade finance fund. I'm looking to scale. And essentially, my biggest headache at the moment is operation. So Finverity is we operate a very customized workflow. So you'd have your general company workflow where I've got my team essentially managing the invoices, they're uploading the invoices, and they're doing the risk approval. But with Finverity, I can actually specify specific workflows for clients. So for example, say every single client, this is the default workflow. They upload their invoices, I confirm them, I look at every single invoice. But Payer4 has been my client for 5 years. I'm very happy with them, I haven't had any issues with them. Maybe I don't want to look at all of the invoices, I want to look at 1 in every 100 invoices, for example. Maybe I don't need Make a Checker, which is essentially 2 pairs of eyes on each of the transactions, and I only want 1 person to look at it. Maybe I want someone quite senior in my team to approve invoices that exceed a particular amount. I can essentially code this in as well. So essentially the point that I'm trying to make is on a fund manager level, when you're actually running your supply chain finance book, you can actually be very specific in exactly how you're servicing your clients. I'm going to quickly show you through invoice confirmation and what that looks like. Your invoice confirmation team is essentially going to be looking at the data to make sure that, 1, it matches what is actually in the invoice, what's actually happening. Here you have your invoice card, where you can essentially see everything that's going on from an invoice basis all the way to the seller and the buyer. You can upload files, so think bill of lading, purchase orders, essentially up to you. How do you run your business? What are the requirements? You can essentially code that into your process. Now, if we are trade finance people, we all know that at the end of the month, when it comes to reconciliation, that is really everyone's biggest headache. We are in a time where customer experience is extremely important. Your obligor needs to be able to know what he's doing, what they need to do, who they need to pay, when they need to pay, and everything needs to be very clear to them. So at Finverity, what we've done is we've actually tried to customize this as much as possible to suit the client, but then also give visibility on all sides. So I'm going to go through just this part of it because I don't have enough time to keep going, but you can see that you're all very interested. as an obligor, I can see exactly what is required of me, what invoices are overdue, what's due now, what's due in the next couple of days and the next couple of months. So your client very clearly knows what is actually expected of them. So I'm an obligor, I'm ready to pay for a few things. I can go and filter what's overdue and actually select these invoices. Say I have $5,000 in my account and I'm ready to close off these particular invoices. So other platforms in the market would essentially mark an invoice as paid once it reaches the maturity date, which actually does cause more problems when it's actually time for reconciliation, because then you actually have to go through the accounts, see what was actually paid, and do the whole running around. With Finverity, we've actually automated this to make things a lot easier for your reconciliations teams, and you can thank me personally later. As an obligor, I can essentially select all of these invoices and proceed to payment. What the platform will do is generate a payment reference. This payment reference, the obligor is very easily able to use their banking systems to send this amount of money with this payment reference. And what that does is it sends a notification to the funder, so myself, I know that my client is about to pay me. And it will generate a payment reference here. I can see that my repayment is pending. So after a few days, I receive a payment from my client. If the payment actually matches what was actually meant to be sent, this invoice will be closed off, payment settled, and everyone's happy, we go our separate ways. However, which does happen a lot of the time, your supplier might pay the wrong amount, might overpay or underpay, and a lot of the time you'll be running around trying to figure out which invoices are actually affected. Here, the platform actually clearly shows you which payment reference is the issue, what invoices are actually included in that payment reference, so both you and your supplier or your obligor can essentially log in and see exactly where the problem is and actually do the reconciliation much easier. The last thing I want to mention is Finverity is not just a tech platform, we are an ecosystem. We currently have our systems in about 8 banks in Africa at the moment. They are SaaS holders, and they essentially co-fund deals themselves. They actually share risk between themselves as well. For us, we really do believe that scalability is really only achieved by visibility and trust in the ecosystem. For us, tech is the obvious solution to that. There are a few people in this room that are essentially talking about how do we reduce the trade finance gap. Well, I've just shown you one of the solutions. So I'm going to be around. If you do want to talk to me or you want to go into a few more questions or more details, I am more than happy to answer any questions.
Thank you. Thanks, Ahanna. We are indeed very interested. We've just had too much lasagna, is all. Do we have any questions from the audience for Ahanna on her very comprehensive presentation? Perhaps I'll start, if that's okay.
Go ahead.
At GTR, we're seeing supply chain finance providers coming to market quite frequently. It seems to be quite a, dare I say, saturated market. What is it about Finverity that makes you guys stick out from all the rest?
Yeah, so I think twofold. The fact that we are not just a tech provider, we actually use our system as well. So we work with quite a few regional banks and asset managers in the UAE. So we are actually very aware of what is actually required from a supply chain finance system. And on the other hand, we're actually very quick to go to market. We're actually able to deploy a system, and we've been able to deploy systems in 19, 20 days. And I mean, we're in South Africa, so I can make this joke. We're about a quarter of the cost of prime revenue as well. So a lower cost of purchase, very quick routes to market, and we are actually very suited to emerging markets. I mean, we don't service the kind of tier 1 banks. Our clients are really the tier 2, tier 3 banks, the new funds, and we are very consultative in our interactions with our clients.
Thanks, Ahanna. They're very lucky to have you. Any other questions for Ahanna? Andrew, did you have a question? Yeah.
Just to understand a little bit more about your business model.
Yeah.
You say you're a quarter of the cost. So, how does your business model work? How do you get paid?
So we operate on a monthly license fee model. So our license fee is actually based on utilization. So the amount of funds you actually push through the system is what we would take a percentage of. We're around 25 bips in terms of push through. We do have our minimum monthly cost. But essentially, we want to give you a system and charge you only based on utilization, and that's how we keep our costs low.
And that's the banks, the FIs?
Yes.
Not the end corporate?
No.
Thank you very much. I think You know, we have had in trade finance, I suppose, a number of supply chain finance providers. And despite the proliferation of that, if you may say, we barely have scratched on the trade finance gap, right? More so in Africa. The question I have is, and if you drill down into why that is, and I think part of it is, you know, from the previous speaker, is the tier 2, tier 3, where there is just no appetite. But a lot of it might have to do with just, you know, not understanding their businesses and probably not having sufficient insight or data to be able to make a different decision. The question I have is, what problem in particular does your fintech or Finverity actually solve, which has not been previously solved, so that we can start to make a dent in terms of this problem that we have?
Yeah, that's a good question. So in my opinion, the problem that we are solving is operational costs. There are quite a few fintechs out there, and I think the previous speaker did mention, typically when you buy a product, you have a really chunky integration cost, you have your license fees, which are quite high. Supply chain is quite dynamic. It does change. There would be a need for a different product, or a particular buyer might need something different. And that's why I specified that with our product, you can actually code things specific to relationships. If I had say, product A, and then I realized that I actually want to have something quite different in my team, and I call up my product and say, I want to have something different, they're going to quote me something crazy or just tell me no. And that way, you can't really scale. The way that we've built our system is so that we can scale with you. Our system is built on a modular technology, which means that we can it's like a pizza. We can take the toppings out and put them in when needed. So as your business is becoming more dynamic and you're able to service more clients, we're also able to customize our technology specifically for that.
Good. Oh, Michelle has a question.
Thank you so much. I'm just curious what technology you're using, and then how scalable is it?
Yeah. So I'm not a techie person, but our system is pretty much on cloud, or we can actually come to premises as well. We have AWS technology, and really right now we are running about a $350 million book in the UAE. We are in about 8 different banks/funds in Africa, and we're actually working with quite a few of the funders in my diagram, where they actually do have quite a few lines with different fund managers. So in terms of scalability and usability, we definitely have that. We don't charge extra for a number of different users. We don't charge extra for new products you want to put into the system. It's pretty much your system, and we charge just based on your utilization.
Thank you, everyone. I think we're out of time. Ahanna, thank you very much. Let's show our appreciation of her presentation. So our third and final company that's going to be presenting to us today is Jeff Blumenfeld. Jeff is the COO of Monetago, which is a financial technology solutions provider. Jeff, over to you.
Hello, everybody. Thank you for having us here to lovely South Africa, my first time. For the warm welcome. GTR is putting on a great inclusive event. So our thanks to GTR for that. And my apologies to Ed Virtue for his tie. We'll have to get around that, but otherwise a fantastic event, so thank you all. Kidding aside, a little bit about Monetago and myself. As mentioned, I'm COO of Monetago, been with the company about 5 years. Come to Monetago after leadership positions at JP Morgan, American Express, GE Capital, Morgan Stanley, et cetera. And I'm joined here with our CEO, Jesse Chenard, and our president, Neil Chenard. Monetago was founded in 2014. We were working with cryptocurrency algorithms at the time, and we pivoted in 2017 to take advantage of the underlying technology and apply it towards trade finance. And what do we do? In 2017, right before I joined, Monetago was working with the Reserve Bank of India, the RBI, on a white paper on the applicability of blockchain technology to the trade finance space. And of course, it worked out great. We had a fantastic white paper. We worked with some of the major banks around the world. And following the conclusion of that white paper, all the banks came to us and said, hey, we want to buy the blockchain. So obviously that's not something we can do. For anyone familiar with the blockchain, it requires a consensus mechanism amongst many participants. But what we did find was a use case that was quite interesting. What we found was at the time, in India, they were putting together a number of what they call TREDS organizations. And what TREDS organizations are, they're a means for small, medium-sized businesses to discount their invoices. And what the Indian authorities did in their wisdom, they set up 3 of these exchanges with different characteristics about them so that these exchanges can compete against each other, so provide the best pricing mechanisms to the marketplace. So that was a great idea. They adopted it initially as a result of some investigation. It was very successful in Mexico. But what we quickly learned was that some fraudulent bad actors would take an invoice to one of these exchanges, obtain financing, and then go down the street to the other exchange and obtain financing as well. And so this issue of double financing we found out to be a fairly prevalent issue amongst small, medium-sized, and large businesses across India, actually around the world. And thus was born our solution. So we rolled out our solution in 2018, been live since then. We developed what we call a fingerprinting solution. And our fingerprinting solution is part of an overall larger platform we call secure financing. But what fingerprinting does, it allows us to verify the trade finance document that's being financed and whether or not it's been financed and used elsewhere. So basically addressing the fraud issue that we found amongst these initial TRED participants. And so we've processed, I think we're coming up about $2.5 million, 2.5 million transactions since inception. And along the way, we've obtained a number of awards. We built the platform initially on a Hyperledger Fabric blockchain technology protocol. We ported it over to R3's Corda platform along the way. And that served us well within the market. And I'll talk to you a little bit about our technology going forward. What else here? So so India's been working great and been validating some the invoices from TREDS and some of the major banks in market since 2018. Working great. We worked with the banks. We connect to them either through a UI interface or through an API as well. In India, we are connected to the banks or connecting to the banks through a partnership we developed with Swift India, where they are our exclusive relationship managers and connectivity points into the banks. Outside of India, that's not going to be the case at all. So looking at fraud, double financing fraud, sometimes it's a hidden problem. Sometimes it's very visible. In this case here, here's a list of some of the major fraud cases in recent years. Double financing is a common element to many, if not all of them. And so our solution would be helpful in addressing some of these pain points, looking back, of course, and of course going forward. In many cases, the type of fraud that you see from double financing isn't caught by the banks. So some banks will say to us, well, gee, we don't have a double financing fraud issue. And in fact, much of your charge-offs, or many of your charge-offs, if they were drilled down upon a little bit deeper, you'd find double financing as part of that. So let me take you through the secure financing platform as a whole. So where you have document fingerprinting, will address whether or not an invoice was presented more than one time to multiple financiers. We also in India layered on top of that our authentication services. What authentication services does there, it allows us to provide the banks and the risk managers additional data points to give them comfort to finance those invoices. So in India, we're connected to, I think Jesse mentioned earlier, the goods and services tax networks of India, as well as the e-way bill system over there, so that the portfolio managers and the financiers can feel comfortable knowing that goods were moved from point A to point Z, that taxes were paid on something, and that the underlying invoice was not used in more than one place. Okay? So that allows additional financing to occur. So between those two items there, those two platforms, two functionalities, we have a great secure financing platform. But what we've learned quickly in India was that, number one, invoices were not enough because obviously many trade finance documents are financed, and also that the underlying blockchain technology, like our friends over at Veefin were mentioning, may not scale to the level that we need to as we take this particular platform globally. So blockchain is wonderful. We are blockchain experts in many regards, and we are very blockchain friendly going forward. It's just not going to be the core of our engine as we take this particular product from India and take it to the rest of the world. These are some of the workflows for document fingerprinting and authentication. So what we learned in India, quickly that the fraud that takes place there, that could be taking place there, might originate not only in India, but from across border. So we needed a cross-border solution to tackle a domestic India fraudulent use case. And then we also needed to scale at a massive level that allow us to take what we're doing in India and apply it to the rest of the world. So the next generation of platform we started working on right away. That was about 2 years ago, working on a cross-border solution and one that can handle the amounts of data, the amounts of verification that we would need across all borders. So we'd really be bypassing these data islands that tend to spring up amongst different consortium. And we also started talking to SWIFT, not only SWIFT at the global level, not only SWIFT India, where we were working with them for the banks. And so since then, we worked with SWIFT to develop some API specs that will accommodate the verification of documentation, trade finance documentation, across many different trade finance document types. So we have purchase orders, we've got warehouse receipts, we've got, of course, got invoices, bills of lading, and I think we're up to 9 or 11 others and more to be added. That extended list of types of documents and the additional technology that we added to the India platform, we tested last year in the Singapore market. We worked with the Monetary Authority of Singapore on a testing basis with 25 banks and banking financial institutions to test that technology. We got fantastic customer feedback. And starting last June, we started moving towards deployment in that. In parallel, I mentioned what we're talking about with SWIFT Global. We have the connectivity option that they're rolling out. It's a new connectivity option for banks, and that's coming live this year. It's actually coming live, I think, towards early third quarter. We are getting ready to test that technology, that connectivity option, to our service in the next month with 10 to 15 banks. And we offer the opportunity for other banks to join. We welcome your interest. So that's a little bit of the workflow there with SWIFT at the global level. And we anticipate this to be a very large success. We have so far, I think 11, 12 of the banks already slotted for this test I mentioned, and we will be live as soon as SWIFT takes the connectivity live. Now, we can connect to non-banks as well, and we can connect outside of SWIFT for the banks, but we welcome everyone to join. So, what are some of the benefits that we've identified? So, what we have enabled the banks and non-banks to do in India is to basically lower their fraud rate. What does that mean to them? Obviously, higher profits, lower fraud is great, but it also allows them to expand their books of business. So as you might be able, if you're a financier, you may be reluctant or hesitant to get into certain market segments due to high risk of fraud. However, this will allow us to expand those books of business for them and ease those concerns a little bit. We were talking to some banks in Mexico, and they were experiencing, there's one bank was saying turning away about 20,000 invoices a week just because they didn't want to deal with double financing fraud and the headaches that go along with it. So they only stayed at the very high level, very high value invoices and stayed away from the lower end of the market, which is a shame. We also obviously have advantages for the borrowers and the market as a whole. I heard someone mention before reducing the trade finance gap. This can go a long way towards that. So what we're looking to do this coming year, obviously deploy our technology globally. We have this global, we call it the Global Hash Registry for global secure financing, as well as add on additional layers of authentication services, just like we did in India, with other golden sources of data that are out there. We've spoken to a number of folks here who have some of those golden sources of data, and we look forward to connecting to you on those items. I think that might be it. Okay, any questions?
Thanks, Jeff. Any questions for Jeff from the audience? Bohani.
Thank you. Very, very insightful. My question is what your success rate has been on stopping the double financing.
Great question. So while we are not fully penetrated yet in the India market, even with the limited number of participants we have in that market, we are seeing about anywhere from 0.5% to 1.5% attempted double financing fraud in the market. So if you took a look at your portfolio as a banker and you multiply the value of your loans, your extended financings times, let's call it 1 percentage point, that would be about what we'd be looking to save.
Michelle.
Thank you. Just two quick questions for you. So outside India, obviously you plan to expand. What is your strategy in terms of partnerships outside India, and how are you going to develop that? And then secondly, you talked about cross-border engagement. Obviously, you're going to face quite a few barriers when it comes to regulatory, data sharing barriers as you're developing your tech. And finally, just curious as to whether you're working with a private blockchain or through Hyperledger.
So that's actually a couple of great questions rolled into one, right? So as far as partnerships, let me start there. We have obviously an existing partnership with SWIFT at a global level. We're approved by their board of directors, the first fintech in the world to do so. We have a global partnership focusing on the ASEAN region to start with IBM. And we have a number of other partnerships as well. A company called Good, G-U-U-D, used to be called vCargo Cloud, out of Asia, and we're working with a number of other partners around the world. I think you asked about cross-border, how we plan on dealing with the data privacy. So what we do when we take this data in, we first of all, the way it works, we take select data elements for each of these trade finance documents, we hash that data, and then it gets submitted at the registry, right? There's some additional secret sauce involved, but that's the core of it at the basics, right? Certain jurisdictions will not allow us to send that data, even though it's hashed, across borders. And there's about 3 jurisdictions around the world that we're working with Google on a beta project to work with to call confidential computing that will enable us to tackle those issues head on. So it would enable those markets to come up as well.
Michelle's just getting mic'd up, but I think her other question was extending into other jurisdictions and maybe talking about the appetite that you're seeing for your product in Africa.
Yes, so we're just entering the African market. So with the testing we have going on, starting with the Swift connectivity option for us this coming month. One of the reasons we're here is to invite any and all the banks. Some of the more global banks we've spoken to already and have enlisted their participation. We see Standard Chartered out there. I don't think they'd want me yet to mention them by name, but there's a number of large ones that we're working with across many jurisdictions: Africa, Asia, Europe, et cetera.
Excellent. I think, Jeff, that brings us to the end of your time on stage, so let's show our appreciation.
Great.
Jeff from
Thank you.
Monetago.